Federal Reserve Chairman Jerome Powell attended an event hosted by New York Times on December 4th, and this is what he said in regards to the economy.
And we're now on a path to bring rates back down to a more neutral level over time. But you're right, the economy is strong, and it's stronger than we thought it was going to be in September. So the labor market is better, and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming in a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral.
Former Cleveland Fed President Mester, she commented on Jay Powell's remark. She acknowledged Powell's focus on balancing the risks between inflation and employment, and she said the economy is normalizing and the Fed wants to bring rates into a more neutral stance over time. Okay, that's the key phrase, over time. And it's understandable that right now, based on the data received, there are a little less downside risks to employment and a little more upside risks to inflation. And it makes sense that you can go more gradually now on cutting rates. So she supports on the slowing down of the rate cut cycle. So currently in the market, based on the Fed funds futures, the market is predicting a 70% chance of a 0.25% rate cut next meeting, which happens on December 18th. And the market is only pricing in 0.25% rate cut in 2025. As you can see, the first 0.25 cut is projected to happen in March. There's a 44% chance of happening in March, and the second one is projected to happen on the July meeting. There's currently a 32% chance of having a second one in July. Now let's talk about Tom Lee. In the most recent interview happened on December 5th, Tom Lee said that the market is adjusting to a shift where fewer rate cuts in 2025 may be viewed as positive. Okay, maybe viewed as a positive. It was initially viewed as too hawkish or a bearish thing, right? Because they were expecting a lot more rate cuts in 2025, but right now people are saying there's one or only two rate cuts throughout the year. But he think the view is gonna turn into a more positive narrative because this shift reflects a preference for longer dovish cycle rather than aggressive cuts. Okay, so it's going to be a prolonged rate cutting cycle, and this is one of the reasons why he believes that the year-end target for S&P 500 is 6,300, implying a 4% increase from December 5th closing price of 60.75. And he said it will be bumpy along the way, but he does believe that there will be a Santa Claus rally, and he did say that if there are bumps that happen in the future, it's a good opportunity for the investor to buy the dip. And the other major reason behind Tom Lee's bullish call is that he said that the Bitcoin's recent rally reflects increased risk appetite among investors. So it's pretty much showing us a risk-on sentiment among the investors, and it shows that investors are allocating capitals previously parked in money market funds or idling due to economic uncertainty. Okay, saying people are using their dry powders to chase risk on assets. Okay, this chart shows you the Bitcoin to US dollar, and Bitcoin price went above 100K on December 5th when the news came out that Donald Trump is nominating a crypto advocate as a new SEC chairman. Now the big question is, are there price correlation between Bitcoin and the stock market? So throughout the years, okay, Bitcoin is getting more and more mature as an asset as institutions gain traction with regulators and offered investment opportunities such as Bitcoin-linked ETFs, and investors appears to be more and more comfortable with Bitcoin and cryptocurrency overall. Okay, so from late 2021 to 2020 into 2022 and through 2023, Bitcoin price rose and fell similarly to equity price. but of course it's much more volatile, right? This chart shows you what happened from 2023 all the way till 2024 April, and as we can see, the Bitcoin is represented in the right line here. If you actually look at the trend, and we also have the SPX down here, S&P, which is S&P 500. We have the Nasdaq Composite down here. If you look at Bitcoin versus equity, even though it's much more volatile, but the trend, right, appears to be very similar, right? When the equities are doing good, having an uptrend, the Bitcoin is also having an uptrend. When it's having a downtrend, the Bitcoin is following suit and also doing a downtrend. So there does seem to be a more and more correlation between equity and Bitcoin as the time progresses and as people get more comfortable with it. So I do think that this makes Tom Lee's reasoning and analysis valid. Thank you very much.